All right, guys, good morning. Good morning. Happy Sunday, everybody. Welcome aboard to our weekly market recap. My name is Carlos Garcia. I'm the founder and CEO of GAR Capital. Today is October 15th, 2023. In about 2 days, October 17th, we will be celebrating our 9th birthday. GAR Capital will be turning 9 years old. Started in 2014, October 17th. What a wild ride. How many bear markets have I been in? That's a question people always ask me. 2015 was a slowdown. 2016 we had a little bit of a pullback, and then 2018 was one bear market I'll never forget. 2020, as we know, 2022 we had a down pullback, but not a bear market, but not a recession. So I would say in about 9 years since I've been doing GAR Capital, I have gone through about 4 bear markets, maybe 5. I think 2015 or 2016 was kind of right in the middle of that. I know there was a drawdown there, but wasn't any kind of a bear market. But ups and downs. That's what the best thing I could tell you about 9 years. But it's been an amazing journey. Nothing is ending. Of course, I always say that we're just beginning. We're just getting warmed up. And cheers to another 9 years moving forward again. I just want to give you guys some appreciation. Thank you guys so much for watching these videos, liking the videos, commenting your questions, watching our lives, watching all the stuff, replying, questioning, everything. Being on the blog, so important. I wish I did the blog years ago. I think that was one of the things that I think about now. Man, that is such a great way to reach out to you guys and give you guys the news. I used to do it on Twitter, now X, but the blog is where we have the info. Again, it's the best way to give you guys a direct information with our analysis real time while the market's moving. I'm so proud of that. I'm so proud of the whole company. Thank you guys to the whole staff. Thank you guys, the clients, members, viewers, supporters. You guys are amazing. I'm not wearing my GAR Capital hat today. As you notice, I used to wear it. I stained it. I actually played basketball with it on outside, and then I had sweat stains, and then I tried to use shot on it, and I just stained it. So I have to get a new one. This is my Dallas Cowboys hat, hopefully to give some luck for tomorrow night's game. But glad to have you on board, guys. Thank you guys again for being part of it. And just want to extend this before we begin. We did have some promos last month. And we don't do a lot of promos just for the simple fact that we don't want to dilute for others that signed up. You know, we don't want to make it just every day being a promo either. But since it's the 9th anniversary of GAR Capital, I wanted to extend the promos that we had, which is the $9.99 for the annual plan. That's 12 months. It's usually $200 a month. You'd be saving $1,400 if you just didn't do month to month, for example. And we also have our masterclass. So again, if you have any questions, Kevin on the server is the person to DM. You can always DM me as well, or you can email us, garcapital@gmail.com for any kind of questions. And always remember, guys, no matter what, paid subscriber or paid member or not, the GAR Capital live market blog will always be free. It will always be free. Stay if you like. We'd love to have you on board. Thank you again. So enough of that. Let's go ahead and get started for the week. Here's the closing prices. For the Dow closed up 39 points on Friday. NASDAQ fell 1.23%, and the S&P fell 0.5%. If you guys joined me last week, you guys remember last week was a little tough. We had that Google trade, and some of the lessons that we talked about. And this week we actually learned from our lessons. How about that? We actually took the info and the things that we took, the mistakes we did from last week, and we moved it over to this week, and we got it all right. So remember, we've had some really tough weeks here and there, but man, this week was nice. So we're going to go over that together. And if you remember as well, last week we had all the headlines regarding Israel and Palestine and the Gaza Strip. And I wanted to wait a little bit to make sure we got till futures open so we can talk about it. So again, I went ahead and did this morning instead, so you guys can watch before football or anything like that. And so I want to go ahead and start with the weekend Wall Street. Now, again, these are derivatives. The Dow does not trade 24 hours. The Dow does not trade over the weekend, only at 6 p.m. after futures. So this is the weekend Wall Street. Again, this is CFD trading. Again, these are different types of derivative instruments, kind of like futures. It's a very, very thin in terms of volume. Again, I wouldn't trade this, but again, it kind of gives us an insight on exactly how we might open. So again, you can see here minus 42 points on the Dow. So again, if we were looking at some kind of real fear out there on some headlines in regards to the Middle East or geopolitical stuff, geopolitical events, excuse me, not stuff, then we would see it on the weekend Wall Street as well. So you saw that we were down slightly, but not exactly panic either. So with that being said, let's go ahead and go over the week first in terms of options. Nick will be going over the future side on video. So here we go. Here it is. So if you remember last week, a pretty rough one. If you remember, we had Google last week. And I think I remember we closed too early, and then we still got bags on it if you held. So we learned our lesson on that one. We stayed patient. That was the key. But again, with a little bit of taking profits ahead just in case as well. Remember last week, we also had the Russell, if you remember, beginning of the week, beginning of the month, my apologies, in October. And again, we hit as high as 30%. We held over the weekend, and what happened? We fell. And then remember Google, if I would just hold that Google, we would have got to 124% on that NFP day. So 2 mistakes have cost us literally an amazing month so far. So here's the month, 8 out of 11. If we strip away those 2, we're 8 out of 9. If those 2 were gainers, we'd be 10 out of 11. So we are on the right path. We're doing the right things, staying patient, doing what we got to do. Next week, I'm very, very excited for what's to come. But again, here's we are for the month. Google, if I just held that, that's gonna hurt. That's gonna hurt me for a while. And then IWM, the 30%er. Now we learned our lesson from that one because we opened QQQ on the 13th and we got out the same day for 30%. That's how we do it, guys. We keep pushing, moving forward. We take the mistakes, we make them as lessons, we move forward so we can get better. This week, 6 for 6, absolutely excellent. That's how you come back. That's the resolve we're looking for. That's what we're not feeling bad for ourselves. We're not saying this is not for me. When you're a child or a toddler and they're walking for the first time and they fall, they don't quit. They don't say, oh, this is not for me. No, it's really just a fight between your mind, your emotions, your greed, and your fear, your insecurities, all of that, all mixed into one. Being a day trader is not easy. You got some highs and you definitely got some lows, some bad lows. I actually put an Instagram post on GAR Capital. It was actually a screenshot from early January 2015. Reminder, 2014, I started GAR Capital. And I had some tough times as well, guys. A lot of tears were shed, absolutely. 2018, December, I remember very vividly, we were 0 for 11 that week in trading. 0 for 11. I thought it was over. I thought I was at my desk, just tears coming out of my eyes. I thought that I made a mistake, that I basically bit too much that I can chew. Just a little bit of background. I used to work for a tobacco company when I started GAR Capital. And I was working there until I had enough money to do this full time, to actually be a day trader full time. And that was in 2018. So since 2018, I've been doing GAR Capital full time. 2014, I've had the company open. 2018, I quit or I left my job the October of 2018. And I was absolutely terrified and afraid of the future. You know, that's one thing about us human beings is that we like repetition, right? We like things that we can expect and kind of call out. You know, we want to predict the future because we always want control of our environment, but sometimes we don't have control. As we know, that's completely natural and normal. But in our minds, any kind of deviation from what we're used to creates uncertainty, which again creates fear. And the source of really all our mistakes, guys, in a philosophical sense, is fear. So again, we start to panic, we start to make mistakes, we start to deviate from our plans, whether it be trading plan, whether it be life plan, whether it be education plan, whatever, because uncertainty and then risk happen. But it's all risky, guys. Everything is risky in life. That's just the reality. You take a risk when you drive your car to work. You take a risk when you eat certain foods. You're taking risks when you don't sleep at a certain hour. You miss meals, for example. Just being outside, I mean, anything can happen. You know, again, we are so terrified of what we cannot control. And that's completely natural. So imagine October 2018, I just quit my job. Excellent, right? Oh man, I'm going to be this full time. This is my next step of my journey. December 2018, the Federal Reserve raised rates and the market was not prepared. And the market absolutely fell. The S&P at that time, I'll never forget, hit 2,300 S&P. How do I remember that? Because that was the low of 2018, which was also the low that we retested from COVID lows. That when we said we're going to retest those lows. And that was going to be the support. And it held, thankfully. It was a great opportunity, that's for sure. But that December, when we went 0 for 11 in options trading, I remember looking at the spreadsheet, and I also had my notepad, and I just absolutely started bawling with tears because I thought I completely ruined it. I made a mistake, and that was it. But the sun rose the next day. GAR Capital's still breathing, still alive here, working for y'all. And we've only gotten better. We've only expanded more. And the opportunities, again, presented itself. But you just got to hold on. You got to stay in. That's kind of the deal. And one of the best analogies from one of my favorite motivational speakers, Jim Rohn, he said, imagine you're at a sporting event and your team is down by 30 playing basketball, an NBA game. Are you going to leave the stadium? Those individuals that leave the stadium at halftime, see it through, see that path through, whatever you want to do, see it through. It's going to have obstacles. You're going to have mistakes. You're going to have tears. You're going to have pain. You're going to have uncertainty, but you got to see it through. You got to hold on. That's kind of the deal. It's a war of attrition out here. And this is a perfect example because last week I remember just like, man, that Google and that IWM killed me. 6 for 6 this week. Excellent. Let's go ahead and track them together. The 6th was last Friday, not the Friday that just passed. So Google and Apple we're going to do first. Let's go ahead and take a look. We're going to go ahead and take a look at. First one was Google. And we opened this on the 6th. And what a move it was. Friday, we got in the 140 calls. We're at 138. And again, continue higher to 142. How wonderful. And you could see 25%. We gave everyone the option to close ahead of the weekend. So again, the idea is to give everyone the option. But we got as high as 133% in the money. How wonderful. Let's go ahead and take a look at the breakdown on our watch list and charts. So we're going to go to the Google trade. Here's on the 9th. And again, we have this gap to fill here above at 140.74. That's what we were looking for. And we got the break of 139.99. That's the breakdown right there. Gap to fill in the daily, 140.74. We're about 55 cents in the money, away from in the money. And that was on the 9th of October. And again, I want to see if I have the Google's trade here. Here's the pre-market Google. Here's the week before. Here we are. Let me see if I can get this breaking out now in the money. That was the one before. Google now breaking out these options at 82% of the lows. Now the 137 calls are in the money plus 22. Again, we talked about this breakout as well. This was the major breakout that we were looking for in Google. So let's take a look at that setup. And again, just a rising channel here, rising wedge. We broke out of it and now we retest it. Now, how important is it for us to hold that? So we went ahead and broke out here. We filled that gap at 140, came back down here. We do have a very clean trend line. So again, we need to be holding this level here of around 137.94. And again, if that does not hold, guess what? We are going to short this bad boy. Let's go ahead and see on the daily if we have any gaps to fill below. Anything worth trading here? No. But again, 137.95, we break below 138. I like the 135 level here. That's your 20-day moving average. That would be the target for us for the week. So again, we hit calls, the market flips, we can go ahead and hit puts. But it was an excellent trade all around. So very proud of that. And here's the toughest part of this trade. Google, we did this the week before, just a couple of days before. And again, I didn't hold it for that NFP and we soared. I got back in again. And again, the perception is always the perception can be reality for some, where that looked like a complete revenge trade. I think when I went ahead and got back in that trade was saying that we were right to begin with. We just didn't see it through. You got to hold on. It's going to hurt sometimes, but you got to hold on. And that was one of the examples of it. But we got into Google again. We were right. It's just a shame that I didn't get the one beforehand. But that's okay. We live and learn. Let's go to Apple. Apple 180 calls, October 6th. We filled. This was the 13th. So let's go ahead and take a look at Apple. We have our alert now for Google. Again, I can put that on the watch list on the blog for you guys later today. So we'll go ahead and put Google as one of them. I'm going to go ahead and write this down as well on the watch list. I have my little notebook here that I write everything down. I'm very old school. So we're going to do watch list. Today is the 15th. I'm going to put the Google trade. Let's go back to Google just to go ahead and reiterate that point. So I'm going to go to the daily. And again, the reason I'm going to, actually I'm going to go to the daily, sorry. I was going to say the 4 hour, but I'll do the daily. Daily gives us a little more room. Again, you have that rising wedge, right? We talked about that. We broke out of it and we came back here to check back in. Now, here's the question. Does this support of this trend line hold? If it does not, we will be targeting the 20-day moving average. So 20-day DMA target, I'm writing it down. And then we're going to do below 137.95. And then the target would be exactly what? 136? I would say 136 or 135. So 135 puts. And again, this is all with volume. We need volume in order to trade these. All right, let's go to Apple. All right, Apple, let's see it. Where are you? I know I had it. Where is that? That was on the 6th. Did I send this on the 6th? Let me make sure, guys. My apologies. This was the 6th of October. So I need to go ahead and take a look. Here we go. I said I have an alert placed for calls target 180 for next week. We need 177.13. That's my level. So here we go. Here's the alert break on Apple. As you could see, we got it above 177.14. I was just targeting that 50-day moving average and possibly above to that gap fill of 181.28. Let's see if we got that gap filled. And we did. We filled that gap, rejected this trend line. Oh boy. Now we can go ahead and short. This is very similar to the setup that we shorted on Qs, which we're going to look at here in a second, guys. You can see the 100-day moving average rejection. Very similar to the S&P 500 futures. Let's take a look at it. We're going to do that when we talk about the week. You can see the 100-day moving average. Not a big deal. Again, we know we talked about October seasonality. That third or fourth week, pretty ugly when it comes to pre-election seasonality, pre-presidential election seasonality. So none of this comes as a surprise. We are expecting more upside into November. As we know, we just need to stay above the 200-day moving average on the S&P 500 as long as October holds. So what I'm trying to say is that as long as we can stay above the 200-day moving average until the end of October, that's it. Once we get out of October, 2 more weeks, I can't say we have nothing to worry about. But again, the percentages are better in our favor for more upside. How's that? Does that sound better? More of a projection. Projections are going to be a little stronger for us, and you're going to see probabilities are going to be leading up to upside for that. So again, you know my target. I still expect all-time highs by the end of the year. We'll see what happens, but I do expect at least as long as we stay above the 200-day on the S&P, we're going to be fine for the month of October at least. Got the rejection of 100 on Apple. We're right here at the 50-day. So now we went ahead and used that same level right at the 50-day, right, to go ahead and to target. So now let's go ahead and wait for the break below the 50-day. We'll get below 177.19 and we can target the 175s, which is right at the 20-day. I'm definitely adding this to the watch list for y'all. Again, we could either do one of two things. Wait for that 50-day MA to break, which would be right here. 177.91. We'll put 177.91. That's the 50 DMA break, and then we would target 175. I would not go below that because we were trying to get out as soon as possible with these names because we have some stuff coming up for the week. We got a lot of earnings as well. We're getting there. We're getting there. Still going over everything else. So well done on that trade, as you know. So we were long Google, long Apple. We may be short Google, short Apple this week. Let's go and keep moving on. Palantir. Palantir has been such a great stock for us, hasn't it, this year? And look at this rejection of 1844. That was the level I was looking at for a breakout. And we came back below. Do we short this bad boy? We went long. Could we go short? Possibly. There's no gaps to fill here. We can target possibly 1569. That's your 20-day. Let's see if we break below 17. And if we do, then we can see if we short this. And if we do, we can short it to 16. Here, you could see right there. This would confirm that breakdown. And again, I would just look to retest here around 16. So I'm going to write Palantir as well. So this will be for the watch list for this week. The stuff that we were long last week, we'll see if we short it this week. Below 17, target 16. Not the best setup. I think Apple and Google look a lot better, but we'll put Palantir in our back pocket. And this is the trade setup on Palantir and what we did. Let's see here, Palantir. All right, Palantir, pretty clean breakout and above the major moving averages on the daily. I mean, we have traded this baby so many times. I would be surprised we get to 19 this week. So we did not get to 19, pretty close, but you could see here 17, 18, that break. You see the breakout there, see it here? There you go. And then just the round trip. So if we break down below that breakout level, that's right near 17. That means we could short. And again, beautiful breakout. We were targeting 1878. We did catch it at least. So it was a very, very clean one. It was a lot of volume as well. Let's take a look at the results of that one. So if you're watching at home, Google was in the money. Apple was in the money. Palantir hit the money. So again, that hit as high as 108%. Apple hit 170% on the highs, 133% on the highs on Google. So if you closed last week, that's completely fine. But again, if you held for the weekend, you looked all right. Amazon, October 12th, the 135 calls for October 20th. Let's take a look at Amazon together. Amazon, we still got that gap fill there. So again, just keep that in mind. This may not be one we want to short either. So I would, like Apple, that filled that gap, and then it has a nice setup for downside. But looking at Amazon itself, I think Amazon might actually fill that gap first before we do anything. Let's go ahead and take a look. I love this right here. Palantir calls were in the money. I think this was aftermarket. Very, very nice. Amazon got a gap to fill at 135. That's basically what we were targeting. The 50 DMA is 134.46 right there. That rejected. So we may have that to be our initial target. Volume picked up right at the gate this morning, and we caught it. So now we're kind of at a place do we get back into Amazon? That's kind of the deal, but maybe we can. So the question is, if we pull back, maybe we can hold the support of the 100-day, 130.92, if we don't fill this gap. Would I get back in? No. I think the best thing is if you have runners, I don't, you can go ahead and, just watch it as you go. But I still think Apple and Google are better setups than this because I really want this gap to be filled first, either to break out a little higher or we just reject again. But that 50-day MA, a lot of these tech names hit some moving averages, guys, and rejected. So we got to be on top of that. Maybe this week gets a little worse, a little more of a pullback. We'll see as we go. Apple, we continued again. It was one of those, if it's hot, just keep hitting it. And what did we do? We targeted that 100-day. Let's take a look at it. Just got a DM here. I'll take a look at that here after I'm done, mate. Let's see here. Apple got a volume spike as well. Those 182.5 calls. Again, I talked about this at 9:40 in the morning. I see Apple pushing higher above the 50 DMA now. You can see that here. This is the yellow line. That's 177.89. I have a target of 182.34. That's the 100-day MA. And the 182.50s would be the play for the week. It's printing for a breakout, but we have Amazon, so no need to rush if we get chopped or reversed. Don't want to hit a double dip. So let's see if Apple breaks the recent highs of 180.64. We can revisit those 182.50 calls for next week. Even the 185s if we see the volume on Apple is outperforming the NASDAQ right now. Amazon is pretty close to the S&P, flat on the stock. So again, the watches and charts, guys. If you are a Premium Signals member, this is part of the deal of being a paid member. You don't get this kind of breakdown on the blog. This is very trade-specific breakdowns. Again, I was giving you guys the heads up before we even got in, just the volume push, because I'm always watching everything. So we got the volume spike on the 182.5 calls. I went ahead and scrambled to fill those out. So let's take a look at the Apple chart, and I broke it down very, very nicely for y'all. So, okay, so we're watching this one this morning, break of the highs. I'm holding the 180 calls on a runner. Apple's outperforming the NASDAQ today. Here's the levels checklist, all the breakdown of the levels. And then you can see we'll either reject or break out here. That's that same level we talked about. The reason I do the 185 calls for the juice and premiums in terms of relative upside is due to demand. And the reason I did not do the 185 calls, again, that trend line. That trend line is going to be key. But we did catch it, which was absolutely amazing. I'm glad that we did. I'm also watching Microsoft as well. You could see this chart here, 333.69. That's going to be our alert if we get there. So again, if you want to write that down, 333.69. If you get the breakout there, we'll take a look at the 340 calls. I was watching that on Friday, but we got the pullback. So it is a pretty nice setup there. But you could see it did have volume as well. That was for next week. So we had Meta breaking out on AMD, but we went ahead and did Apple. and we got out. So Apple hit as high as 64%, and here was the last trade of the week. QQQ. You could see here this rejection of that trend line, and yes, we do short sometimes, not just long. Got the 360 puts October 20th, filled it on Friday, $2.36, pretty expensive, obviously in terms of relative of how we usually trade. We'll go to the watch list and charts for Qs, and again, when things change, we got to be ready. That's really it. So we sliced the 100 DMA at 366. We rejected the daily trend line. My target is 360.239, which is the 20-day MA. Got some great volume, 17,565. Maybe Friday the 13th pullback coming. Yeah, at least on NASDAQ, 1.23%. So we got that right, and we got out. So you could see that break in that slice of that 50, got that 100. We were looking for the 20 right there at 362.38, and then we bounced right off the lows at 363.90. Doesn't mean it's a bad trade if you're still holding it. Again, there's still some possible downside. And again, for the QQQ, for this to break out, we got to get out of this trend line. Very, very clean. Here is your shaded zone of support, which is right around 353. And if we expand this out, that's basically the resistance that we had back in 2022 April. So we still need to break out of that. If we can get above 375.07, then it looks like Qs are for a breakout. Yes, 400 would be a possibility, but we need to get out of this trend line here and break out. So as of right now, looking at the numbers, it looks like everything is set up for a pullback of a continuation. So let's take a look at S&P 500 futures. As you saw that we did this week, just want to remind everybody, it's all there, 6 for 6. Well done. Congratulations to you guys for sticking with it. Let's make sure next week, this week coming up, we set ourselves up with the nice setups, so we make sure we get another 6 for 6 next week, and then we keep doing it and keep doing it and keep doing it. It's a process, as always. S&P 500 futures, taking a look at that trend line. We did break below it in October of this year. Could we revisit? Possibly. We are below the 20. We know the saying, below the 20, not good things happen. Got to stay above 4,300, guys. Got to stay above it. And the 200-day looms, 42.44. So 4,300, we've been kind of hovering around there. Could we recheck that and bounce? Possibly. But we got to see what's coming up for the week. And we'll go ahead and move it over to Forex Factory with that being said. Here's a preview for the week. We're going to go ahead and move this over to the week. FOMC member speaking, Fed speakers, as we know, has been happening after the quiet down period post FOMC. So we have more Fed speakers. We know that's just something we got to live with. Fed FOMC member Harker is speaking. We got core retail sales on Tuesday. In the morning pre-market. We also have unemployment claims on Thursday. That's every Thursday. And Fed Chair Powell is going to speak on Thursday as well. So let's see what's in regards to. Due to speak at the Economic Club of New York luncheon. Don't know if he's going to speak about monetary policy, but it's something we'll always monitor, of course. So a lot of Fed speakers. We got retail sales. Really what's important this week, guys, is going to be earnings. And earnings, as we know, as we're getting to earnings season, we kind of know that the expectation is pretty low across the board. Financials had some really great earnings. Didn't see anything out of the ordinary in terms of credit risk or anything like that. The banks did well. Bank of America reports on Monday, but Chase we know is the largest bank by market cap, the biggest balance sheet, and they did excellent. The financials did not trade the best Friday. We'll take a look at the hourly chart, and you can see we got a spike in the morning right around to 33.65 and pulled back to 33. I mean, what can you do? Pretty much just chop. So again, this is the broader financials ETF XLF. We're still below the 20, just so you know, and we rejected the 20. So 30.89 could be a possibility if things really get away from us, but as of right now, not much to do here on XLF. Let's go to the weekly chart. Bounced pretty cleanly, guys, off the 200-week MA. Pretty clean on the financial side. So we're going to keep an eye on financials. I've noticed that, remember with SVB in March where we had the financial issues with the bank runs and everything like that? The Fed did intervene then. They loosened monetary policy. So we'll see if they turn the spigot on again if anything does change. So let's go ahead and get to earnings. Where is this earnings calendar? All right, so here is the earnings for this week. We have Bank of America on Tuesday, not Monday. My apologies. Lockheed Martin, Goldman Sachs, and Johnson & Johnson on Tuesday. United Airlines after the close on Tuesday. Wednesday, Tesla and Netflix. I know Nick was talking about Netflix short, but they report on Wednesday, so it's going to be a little bit juiced in terms of premiums, but we'll keep an eye. Procter & Gamble Wednesday before the bell, Morgan Stanley as well, ASML. Tesla's going to be big. That's going to be on Wednesday after close. Thursday, AT&T, American Airlines, Taiwan Semiconductor, Nokia, Snap-on. Las Vegas Sands reports on Wednesday. CSX WD-40 reports on Thursday, and really nothing that stands out on Friday other than Schlumberger and American Express. So let's go ahead and just talk about the ones that everyone really is concerned about, which is probably Tesla. Take a look at the price action. Remember, guys, there's no such thing as good or bad news. It's just all reaction. So even if companies beat their earnings estimates, we're really just expecting what? We're expecting the reaction. We still have a gap to fill here at 289.15, and we're holding on here to that to that 50 and the 100-day moving average cross. So we're still below the 20. If we get below 247.88, you got a trend line here right around 227.87. I apologize for all these lines. It looks absolutely ridiculous, but sometimes you just got to live with it. You got a trend line here back from the lows. You got this breakout here. I'll remove this. We don't need this anymore. And of course, the major trend line is back from 2021. So if we go to the weekly now, let's take a look at Tesla. Wow, in a 3-year period, pretty choppy. Kind of, got some deviations of 414, but you can really see even on the weekly, those moving averages are converging there. So we need to see if we hold that level of 247.88. If we go higher, we have a gap to fill from the daily, 280, 289, 290. And if not, if we pull back, you gotta hold here around 230.38. And if we were to short, let's say, Tesla had a bad number, whatever happens, and we break down below 247.88, the target would be right here, right around 230. That's the trend line. And if it breaks down more, you got the 200-day at 211. So we will see, because we also have a gap to fill here at 217 that has yet to be filled. So Tesla's going to be very interesting. I mean, I wouldn't trade it ahead of earnings unless we start getting some really good options vol. They look at Netflix. Netflix breaking down below the 200-day. You got a gap to fill here at 341. I see it. I see it. Absolutely agree with this setup. Here's the problem. We have earnings, and this is going to be an expensive one. So for those who may want to step away from this, maybe QQQ a little better. We traded that on Friday. Maybe if we break below here, the 20-day up 362. If we do, we can target below for a little more weakness on Qs. That'll get us back to this shaded area here around 360. So that would give us some exposure to Tesla. That might give us some exposure to Netflix. Again, kind of a proxy way to do it. Let me go and take a look at the almanac before we wrap up for the day. In terms of the almanac, today is the 15th. So here is the almanac right here for October. Tuesday is a bullish day, apparently. Wednesday is a bullish day, apparently. 60% of the time on that day, it's usually bullish. And we have OPEX on Friday. OPEX is always fun. Again, just means elevated volume. And here's some statistics. October expiration day, the Dow down 6 straight, 2005 to 2010, but is up the last seven of the last 9. The crash of October 1987 was on the 19th. The Dow fell 22% that day. And just also one more point here, the Monday before October expiry day, the Dow has been up 30 of the last 40 times. Take those statistics with how you like. We'll be back with you guys on Monday. We went over a ton of stuff. Great week so far. Last week, excuse me. We're going to keep that momentum moving forward, guys. Thank you so much for joining me today. I apologize if I went a little long this time. I was talking about GAR Capital since it's their 9th anniversary again, guys. Thank you guys so much for the support. Hit that like button, subscribe if you like these videos. Join our live market blog, link in the description below. We'd love to have you on board. Website, www.gar.capital. My name is Carlos Garcia again, founder and CEO of GAR Capital. Glad to be with you. We will see you guys tomorrow for the next morning note. Cheers.